In this video, we'll be taking a look at the future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to trade first like rational, check out our complete forex trading course on Udemy. I have the link attached in the description below as well. Now, this is a gold chart on 4 hours time frame. Last week, we talked about the possibility of price reversing to the downside for a possible retest before heading higher. So we took out this area of resistance as our, potential area of reversal, but we seem to have been trading below this area right now. So I don't think we are still gearing up for a good bullish move to the upside, because if you pull up the moving average, so the 200 EMA and SMA on the 4 hours time frame, you can see that we are trading closely above that moving average right now. But if you go down to the 2 hours time frame, for example, in 2 hours time frame, you can see that we just bounce off of this moving average like we did over here. So there's no telling how many times we range around this level more before we do get higher. But one thing is sure, I do believe gold is still bullish and the trend is likely going to continue. Now, I know we may see some volatility when the market opens because of the news concerning the United States and Iran, with the war between Iran and Israel. So that's still yet to be seen. So when the market opens, we get to see where price opens. If it opens with a gap either up or down, that gives us a clear insight as to what to watch out for before going long. So I think worst case scenario for price dips before we go long, because an escalation of the war means more demand for gold, means bullish move for gold. So if you go to 6 hours time frame, just worst case scenario in my opinion, maybe, just maybe, we see price dip into this area of value before we bounce up in continuation of the bullish move. So what you can see here is a moving average closely following this trend line, dating all the way back to the start of the trend, right? So start of this immediate bullish trend since December of last year, this moving average tracks the trend line accordingly. So right now, the 6 hours time frame, if we do see price coming to this moving average on the 6 hours time frame, that would give you a very solid opportunity to trade a bounce in anticipation of a bullish move to the upside. So if this doesn't happen, so we're going to the 1 hour time frame, for example. If that doesn't happen, I'm going to get rid of these moving averages. So on the 1 hour time frame, since that's where we watch out to take our positions for most traders, 1 hour time frame, if that doesn't happen, moving all the way down to these lows, I would watch out for something like this, right? So right now, we seem to have broken this trend line with a good gap. I want to see more consolidation, maybe a pop-up to the upside, consolidation a little bit more before we go higher, right? This would be another confirmation to go long, in my opinion, because then we would have taken out this area of resistance. So there's a mini area of resistance over here. If this happens, we trade above these price levels, this stacked up consolidation, then that could be another confirmation to go long. So entry is going to be immediately after we break out this price level. Stop loss is going to be underneath the consolidation list of the breakout, however high or wide that is. First take profit target could be here, so we could remove small positions from your overall positions. Then second one will be here. Third one, you hold on as we go higher, because price would then be in price discovery. So that's it for my bullish case scenario on gold. I don't see any reason to be bearish right now. The only reason where I would turn bearish is if on a 6 hours time frame, for example, right? On a 6 hours time frame, for example, we see price come into this area of value, consolidates a little, and then breaks out. So this would be my bearish case scenario, but we aren't here yet, so I don't want to talk about being bearish. I just want to stick with the trend, see how the chart evolves, and then we pick it up from there next week if we do get a downward bearish pressure. But for now, I think the bullish trend is still intact. We just have to look for that sweet spot where we can confidently take our trades. That's it briefly for GBP USD. Moving on, we're talking about crude oil. So crude oil, similar to what we had last week, nothing fundamentally has changed or technically. So our expectations is to wait for price to come into this area of value. Then we look for an opportunity to either go long if we do get a bullish breakout, or go short if the chart pattern suggests that we're going lower, right? So for now, It's still a game of patience, still watching, seeing what the market does when we get into this area of value, which could mean closing this gap over here like I explained last week. Then we'll take a look at this chart once more to spot our good trade opportunities for that week. So I'm just talking about this briefly to show you that there's nothing to be done right now on crude oil besides waiting, right? So if you're thinking of getting into trades, you could probably, give me a minute. You probably want to go to the 1 hour time frame. Just going to get rid of this. So for those who are eager to take trades on crude oil, you're probably looking at the 1 hour time frame, trying to pull up this price level as a good area of resistance, which seems valid in my opinion, right? So if you want to go long, try to catch the move from here all the way to these highs, you could watch out for a price break. So something like this, right? Followed by a good breakout to the upside. So these breakouts, your entry could be here, stop loss could be underneath the consolidation listed breakout, and your trade take profit target would be around these highs as I've explained earlier, right? So this is another way to look at it if you intend to day trade on the 1 hour time frame. But mind you, be very careful because the market seems to be extremely volatile right now, so anything could happen. But for me, I'm staying away. I'm going to be patient, wait for price to get into this area of value, then see how price reacts with the area of value, then I jump into my trades accordingly. Lastly, for today's setup, we're going to be talking about USD-JPY. So I don't trade currency pairs. For those who do, something very interesting is happening right now. I think the market is open for currency pairs. So this USD-JPY on the 6 hours time frame, and we've had a very good symmetrical triangle over here. 1, 2. Now it seems price is trading above this, trend line, right? Which suggests that we may see extended price incline to the upside, right? Extended price movement to the upside. You can see the lower bound of the symmetrical triangle, 1, 2, 3, 4, 5. So 5 multiple touches, which means this breakout could lead to higher price targets. So you could see price going all the way high as these price levels before probably continuing the bearish move to the downside. So I'm going to show you why this area of value is important. So if you take a look at this range, just give me a minute. Yeah, taking a look at this range, if you pull this all the way, extend this all the way down to this price levels, this could be our potential next target. Perhaps we could get stopped out around these highs. That's still yet to be seen, but I'm gonna bet we see price accelerate all the way to this area of value before markets decide what's going to happen next. Either we keep going higher or we reverse the downside in continuation of this bearish move to the downside. Meanwhile, you could also pick these highs, for example, all the way down to this price level and use this as a guide, right? Because if we take out this area of value, that means price is likely going to go touch this trend line before we drop lower, right? Then go up. So this could be an Elliott wave. I'm not going to go deep into Elliott wave today, but this is briefly what I'm watching out for on USD-JPY. So right now you have to be very careful with your trade entry. So going down to the 2 hours time frame, for example. So in 2 hours time frame, we seem to have opened with a gap. There's a good chance price reverses to the downside to close that gap, which is what I would be watching out for to go long for those who are trading, currency pairs, right? So you want to watch out for something like this. So maybe a move up followed by a drop down and a small consolidation over here, followed by a bullish move to the upside, right? This is something you want to watch out for to go long. So if this happens, you can enter after the consolidation and the breakout. Your stop loss can be underneath the consolidation list of the breakout. Take profit targets could be as high as this price level over here. Then you watch out to see how price reacts to this area of value, if we're going to keep going up to hit this trend line or we do get a reversal to the downside. But for now, we're trading above this trend line, which gives us this symmetrical triangle pattern. Wait for more consolidation as some sort of confirmation that price is going to go higher. You enter, exit around this area of value, and watch out to see what the market does. That's it briefly for USD-JPY and this week's analysis. I would have talked about other currency pairs, but they are just not in touch right now. Euro USD, GB USD, they've been messy. So USD-JPY is the only charts for major currency pairs I see that looks, worthy of, taking a look at. That's what I'm talking about, USD-JPY right now. But without further ado, guys, I want to implore you to trade with good risk management, follow your strategy, be patient enough to wait for the perfect setup before you get into those trades. That's it from me, guys. See you next week.